All right, guys. So you've made it through the entire core content, and kudos to you for doing that. And at this point, I want to help you guys put it all together. I know you understand now what a liquidity sweep is, what a fair value gap is, what an order block is, what a PD array is. Now I want to help you guys put all of that together so you can find amazing, high probability trade setups. Okay, so, like I said at the beginning of this entire bootcamp, when it comes to trading, it's important to understand time and price. Now, when I'm trading, like I said, most of the time, 90+% of the time, I would say I am trading AM session for New York and every once in a while PM session for New York. Okay, so that is what I'm going to do most of these examples centered around. But you can take these same concepts and apply them to London session if you are somebody that is going to be trading a lot of London session. Okay, so I don't want you to think just because I'm showing you New York session trade examples that's all that it works on. This is just what I personally use it on myself, and because of that, I want to make sure that I'm giving you guys education based off of my experience, not just only based on theory. Okay, so that's why you'll see most of these examples centered around that. I'm going to give you guys several entry models throughout this part of the video or part of the bootcamp, so just bear with me. But this is going to be one of the entry models that you guys can utilize, and this is actually going to be the fair value gap entry model. And this is actually, I would say, the more conservative entry model that you could use. And the reason I say that is because if you are getting a fair value gap after a liquidity sweep and you're also in the correct time to be in the market, that is usually a very, very, very telltale sign that the market is indeed reacting from that liquidity level that was swept, and it is very likely that price will fill that gap to then continue in the opposite direction of that liquidity sweep. So what I like to do in the mornings before market open, for me, I'm Central Standard Time, so market open for me is 8:30 a.m. Central, which is 9:30 a.m. Eastern or New York time. Okay, so what I like to do first thing in the morning when I'm getting to the charts is I'm marking up areas of buy side and sell side liquidity. So here we have buy side liquidity, which is just an old high, right? You have other forms of buy side right here as well. So price poked up right before opening bell and actually got above this high, and this high, right? And then it tapped into this order block. So pretty interesting. But we definitely sweep a key level of liquidity as we're inside of the first macro, which is before the market opens. So again, bringing that time and price back into it. And then what happens is usually I'm not looking to get into a trade personally up until opening bell or shortly after, right? So that's usually what I'm doing. So what happens is then price right before opening bell makes one more push up, and it also did what? It grabbed this buy side liquidity. So that's what happens a lot of the times with these macros. And again, with opening bell is manipulation will come in and grab liquidity to get ready to fuel up for the moves that are about to take place. So we have this run on liquidity right before opening bell, right before the 5-minute candle, right before opening bell. You get that run on liquidity, and then opening bell opens up, and we see this huge reaction to the downside. Huge reaction to the downside, guys, with opening bell. And let's see what the next candle does. The next candle pulled up, but it didn't close the entire candle, right? Price pulled up, and it left this fair value gap. Price left this fair value gap right there. And then obviously we don't know what happened just yet, but here's how you would want to play this. And we covered this a little bit in the fair value gap part of the content, but the way you would play this simply, guys, would be plan to execute your trade right at the beginning of that fair value gap. Again, like I said, if you wanted to be stingy with it, you could do the 50%, but it all depends, right? For me, I'm very comfortable with a 5-point or a 5-handle stop. That's very, 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 moderate. That's nothing crazy whatsoever. And then when you're actually looking to set up your take profit levels, my first take profit, guys, is generally always a 1-to-1. So if I'm doing a 5-point stop loss, I'm doing a 5-point TP1 as well. And that's usually going to be my first take profit one is that 5 points. I'm getting a 1-to-1. I'm closing half of my position. So if I'm risking 1% on that trade, by me doing this, guys, a couple things. One, I'm securing 0.5%. And that is so important because trading is not about hitting home runs. Trading is about stacking small wins over and over and over again. And by you doing that, guys, by you making a 0.5% at a time, a 1% at a time, it doesn't feel like a lot trade by trade. But if you zoom out and you compound that gain over the span of 1, 2, 3, 4, 5 years, it's crazy what that will turn into. So it's not about hitting home runs. It's not about necessarily hitting all these 1-to-5s, 1-to-10s, these crazy risk to rewards. And the people that tell you that they're hitting those risk reward trades, they're not. I promise you they're not. I swear on everything, they're not hitting those trades like they tell you they are. It is not happening, I promise you, okay? So nobody has a crystal ball. Nobody is predicting those big of moves all the time without getting stopped out majority of the time, if not getting, stopped at break even after being a long ways in profit. But I digress. So TP1 is always, for me, 1-to-1. So 5 points for TP1 right there. And then otherwise, I'm targeting opposing liquidity. Or you could use fair value gaps, right? So like if you wanted a partial again, there's a fair value gap right here. Fair value gap right here, right above this order block. You could use the order block as your TP1 or your TP2, sorry. So because this was kind of close, I would actually probably just do that. I would do TP2 right there. And then maybe final TP, you could target this this low. And the only reason that I wouldn't necessarily prefer to target this low, it could definitely get down there, and maybe it does. I don't even remember. But it's just because, price already ran liquidity right here. Price ran liquidity right here. So I know that this is a sensitive area to where price might just be coming back down to retest it and go back up. So I would be totally fine not being greedy. And this is something that you'll have to work on yourself. For me, what helped me a lot was not being greedy with my trades, taking what the market was willing to give me. So many people lose money because they're trying to get and take from the market, so much to the point where they literally they make money, but they let a losing trade turn into a nothing trade, or they let a winning trade turn into a losing trade, right? So it's not something that has been, I found it as a way that's not sustainable for me. You need to be willing to take what the market's willing to give you, and don't be so caught up on crazy risk reward. It's really not what it all seems to be. You want to be, again, getting your singles, getting your doubles, getting on base, and just stacking these wins over time, because here's what happens. Let's just play this out. So price comes up, boom, taps into that fair value gap. You could have got a limit entry, market entry order. I mean, let's just say you even got the 50%, right? Just for fun. Let's just say you got the 50% of that fair value gap, the equilibrium of that fair value gap, right? And then you're waiting for take profit 1. Boom. So take profit 1, you take half your position off, remove your risk. You're stopped to break even, risk free. You've made a 0.5%. You've made money regardless of what happens from this point. Price comes back, stops you at a break even. Amazing. You made a 0.5%. Incredible, right? That's awesome, right? Let's see what happens from here. Boom. Full take profit got hit. Look at that. Crazy. And even if you targeted that low, that got hit too. So full take profit hit. Boom. TP 1, 2, 3 in a matter of 15 minutes. So actually, I guess it would be 20 minutes if you count the bullish candle. So yeah, an amazing trade. Just using a fair value gap entry, sweep of liquidity, line up with time and price. Got your displacement, got your fair value gap entry, boom, go for opposing liquidity. Very easy, very simple trade, right? So let's go ahead and remove those drawings, and then let's go see what other examples we can find with this. Okay, so this would be, looks like a PM session trade. Let's just see what this looks like, guys. I don't know. I haven't looked at this on the smaller time frames. So it might look like something, might not. Let's actually go back a little bit farther. So here was the run on liquidity right there. Let me go and stop dragging that around. But here's our run on liquidity right here. Right? We took that low. You could say these are equal lows right here. There's all kinds of candles in here, all kinds of liquidity that got taken out on this move. Okay, so run on liquidity. Now what are we doing? We're waiting for some form of a sign to tell us when we can start getting in for buys. And the benefit of dropping down to these smaller time frames, it can help you be more precise for when you're entering. Okay, so again here, what do we see? And I'm kind of giving it away obviously already, But let's just go right here. 1 minute time frame now. We swept sell side liquidity, and now we're waiting for something to tell us when to get into a trade. So we don't see any fair value gaps, literally zero fair value gaps in any of this price action. So entering anywhere in here would have been aggressive. I can see one right now where you maybe would have taken the entry, but it is aggressive. Why? Because there's no fair value gap left behind. There's no like true your fair value gaps are your displacements, and that is your biggest sign that price is big money has stepped in and is willing to move price in that direction. Okay, so here we see, and this is on the 1 minute time frame now, push down, one last final punch through, grabbing liquidity one more time. Boom, 1 candle, 2 candles, 3 candles. Where's our fair value gap? Very obvious right here in this candle. So again, playing this the same exact way. This is right here at right before 2:30 Central Standard Time or 3:30 Eastern. Again, slap dab in the middle of that macro. Can't make this stuff up. Long position. Boom. Stop below the low. About a 4-point stop. And then TP1 could be this high right here, which would be over a 1-to-1 actually, right? I kind of wasn't completely honest. My TP1, guys, is always actually 5 points. It's always actually 5 points, even if my stop loss is less than 5 points. That's just the way I do it. I know that these concepts are accurate enough to yield me at least 5 points from the market, but if my stop loss is bigger than 5 points, like let's say my stop loss is 6 points, that's when I'll do a 1-to-1. Otherwise, though, if I get a smaller stop loss, that's just a bonus. It's just a better risk to reward. But I always keep a TP1 at 5 points, and that was something that I didn't do always. But as my trading has developed, that is something that I have started to do. So let's just play this out. Where would we look for a second take profits? You maybe would do this. I probably wouldn't because it's so close to TP1. So what I would do maybe for a TP2 I would do this fair value gap, right up here, right before the order block, or maybe you would use the order block as your take profit too, or you just say screw it and you just target these highs. Truthfully, what I would do, just because I see that this order block filled this fair value gap, I would just say screw it, let's just take this order block. So I would just do this order block for another take profit, and then like an extended TP. This is where you can start using your other methodologies, right? Like I could take this entire swing on the 5 minute time frame, guys. Look what I can do here. So I can take the other methodologies, like what I taught you with the PD array, and you could do this right here. Boom. Where's your equilibrium at? Your equilibrium is right there at the 50%. What does that also line up with? It lines up with this previous structure right here, which were failed order blocks that could now be a breaker on like the 15-minute time frame, right? So you guys can see how you can piece all of this together from this point forward as you're looking at the chart. Let's just go ahead and extend this up, to here. Also lines up with a 1 minute order block. Go figure. And let's get it lined up right on it. Boom. And let's just see how it plays out. We're going to TP1 here, go stop to break even, TP2, TP3, okay? So maybe we hit TP1 and get stopped at break even here. I'm not sure. Boom, we work into that fair value gap. Price comes up. Fair value gap again, still nothing. Boom, TP1, half off. You've made a 0.5%. You're risk-free. Whatever happens from this point, we literally don't care. We literally don't care. I don't know. We'll mark this up just in case, just to see if it ends up giving it to us. But like, let's say you missed the trade and you needed an entry after seeing this play out. Maybe you want to enter again off that. We'll just see how it plays out. I'm not even sure. Let's see if it respects it. I guess you don't even get it. So right, it rips up. TP2 almost hits TP3. Let's see if it gets there. Boom. Yeah, it does. Wow. Amazing. So it worked out great. And that was, another great trade, playing out again with the time and price. And that's why time and price is so important, because if you're just looking at any willy-nilly thing on the chart here, like, why would you be looking for a trade on this at, like, again, in here? Like, late, like, you're getting into Asia session, like 6 p.m., like, it's just not going to work out. It might, but it's like you're just putting yourself in a low probability market condition to try and, like, force a trade. It just doesn't make any sense. So, you know, again, that is how you can use a fair value gap entry with all of this. We're going to go over other forms of entries as well, but hopefully this helps. That's probably my favorite entry model right there, is using those fair value gaps after the liquidity sweeps, because again, it's just the most telltale sign that you're ready to go in that direction after the liquidity sweep. And if you're doing it within those pockets of time, it's just very, very, very accurate. And you'll have a lot of success trading that way. And that trade management system, you can tweak it if it's something that doesn't work for you, but it's something that worked for me after trying out all kinds of other trade management models. But for me, I'm all about paying yourself as price gives you what it's giving you, because you don't know if it's only going to give you those 5 points and turn around. You don't know if it's going to give you those 2 take profits and then turn around. You don't know. Nobody has a crystal ball. Nobody knows, right? But you've done the work of analyzing the market and putting yourself in a high probability setup, and then it's your job to pay yourself as the market is giving you whatever the market is willing to give you that day. Some days it'll give you the whole move. Some days it'll give you only part of the move. Some days it's going to take money from you too, guys. This isn't a magical strategy that never loses. It takes losses just as much as any other strategy can. This is just a very high probability strategy, and if you pair it with good risk management and paying yourself like this, you're going to find that your win rate is going to go through the absolute roof with this thing, guys. So hopefully this was helpful, and I'll see you guys in the next entry model video. See you guys in the next one.